Good afternoon, everyone. Welcome to Stock Talk Thursday. It is January 20th, and we've got an interesting market that we're going to be looking at. And we're going to be looking at what's hot, what's not. And I've got a special one for you today because I actually have two what's hot stocks for today. And I'm going to explain the second one because it's not exactly what you're going to be thinking. So we're going to look first at the market, look at what was hot and not last week, and then we're going to dive into this week. So let me share my chart with you here so you can take a look at that. There we go. All right. Perfect. Everyone's seeing the chart, and that's good to go. All right. So like normal, I'd love for this to be interactive. Benjamin, I see you there saying hello. Hello back to you. I'm glad that you're on. I'm glad that you're commenting. So throw questions and comments in. I was about to say the chat, but this isn't Zoom, in the comment box, and love to interact with you guys and have this be, kind of a back and forth thing. So that's awesome. Looking at the market last week, we were like, what's going to happen? We were kind of on this day right here. We had failed to make a newer high, but, there was still the potential that it would start moving up again. And, well, that has not happened, right? So in this uptrend, we made a higher high here. We came back down, bounced off of support, and we made a lower high. And that's not always a big deal unless we make a lower high and then we break through support. The support really was the 100-day simple moving average, this red dashed line right here. And what happens now when you come here, you got a low, high, higher low, higher high, higher low, the lower high, and then you come back down, you break. This really looks like a head and shoulders pattern. A head and shoulders pattern is a bit of a bearish signal. And not only do we have that head and shoulders pattern, but initially today, so yesterday we really broke through support. And then today, initially the stock was up, right? And I'm like, oh, okay, it's coming back to normal. But I was thinking like, ooh, this might be kind of like a fake out move, right? And that's kind of exactly what happened. We had what's called a kiss goodbye. And so the market moved back up to previous support, kissed it, and then turned the other way and was like, bye, I'm out. And so the stock, the overall market came down quite a bit and is kind of looking a little bit ugly right now. So a lot of volatility in the market. We've got that head and shoulders with the kiss goodbye. Both of them are bearish signals. So, and then we came in the last hour. Let's see, we started the last hour right about this level right here and finished down here. So this is the distance that the whole market came down in the last hour of trading. So that's pretty significant. Broke the lows back in here and here. So pretty heavy selling pressure going on in there. So just things as traders that we need to kind of keep in mind here. Benjamin, I see your comment there. What about that dip in Tesla? I haven't seen it yet. Let's go take a look at Tesla. I'm curious now. It kind of piqued my interest. We always know Tesla as being one of those that is pretty, pretty hot for the most part. And Tesla could have been, your hot stock for a whole bunch of these Stock Talk Thursdays in the last couple of years. And Tesla, looking at here, and that doesn't look too bad. They didn't come crashing down. I see some level of support right there at the 996 level. It had been lower before that, but actually, this is a good enough. This is a good catch right here. This is a good enough line to actually draw a line here, because we've got support, and support again. It did come down below that, but it looks more like an anomaly. And support again. The question is that going to hold up? Because we still have that lower high as well. Even on Tesla, you kind of have a little bit of a head and shoulders action going here. So if it breaks support there, where's the next level of support that it could go to? Well, maybe the 100 simple moving average, as that's where it was before. I'm not sure what this line is. Let me zoom out more. Okay, so that line had to do with this. So anyway, that's kind of what Tesla's looking like. So not as bad of a day for Tesla as a lot of the rest of the market, but you're asking maybe a bounce. Well, it could, but one of the things we do as traders, we don't try and tell the market what to do, right? We let the market tell us what to do. And so if I am looking at Tesla to get into a trade, maybe something bullish, then I'm going to wait for Tesla to bounce and clearly show, yes, it wants to go up again. But just one other thing about Tesla, right? If from a trader's perspective, things we keep in mind is earnings right here, right? We've got earnings that are going to happen next week, Wednesday on the 26th. And so it'd be really hard for me to get into a trade right now. We also have the Fed meeting happening next week, right? So that's a lot of volatility into the added into the market. So it just makes trading in general a little more difficult. So especially with Tesla here, with earnings also next week, a lot of volatility. This chart could get blown up in either direction, honestly, but by the end of next week. So, with Tesla, I'd rather wait and see. And yeah, Benjamin, you got it exactly right. We're going to let that gorilla lead because, if we try and dance with the gorilla and we try and lead, we're going to get our feet stepped on. And gorillas are big. So anyway, that's great. Looking at Tesla there, we looked at the market. Let's take a quick look at last week's what was hot and what wasn't hot. And if you remember last week, Halliburton was hot. Energy overall was pretty hot. And you look at Halliburton lately here, and the last week, no different. Yeah, we got 3 solid candlesticks there, but let's take this into perspective, right? It's on the 5-day exponential moving average. Like that's where it's sitting right now. The stock that's riding the 5-day or above the 5-day, like it was here and up in here, is extremely hot. This is why it made our hot list last week. And it's interesting that it came down from where it was, because earlier when I looked at this today, it was kind of at the peak of this wick right here. And I was like, oh no, I missed it, because this is a pattern that I like to look for, where it moves up and then just gently pulls back to the 5-day exponential moving average and then bounces up from there using the 5-day as support. That's a pattern that I kind of like to trade. And I was like, oh man, I missed it. But who knows? Maybe Halliburton's giving us another try tomorrow. But we'll have to see what that what that market tone does with the overall market. And just like with Tesla, now that I'm looking at this again, we have earnings next week. So maybe I didn't miss it, because I wouldn't really want to be in that trade anyway, with earnings coming up next week on, I think that's Monday, the 24th. So regardless of what the chart's telling me on this one, I'd have to wait. But Halliburton's still showing to be pretty hot. I mean, let's compare it to the overall market, right? Overall market, boom, come crashing down below the 100-day simple by like a lot. So I mean, it's bearing down on the 200-day simple right here. The 10's below the 20. So the EMAs are, and the 20s almost below the 50. So the EMAs are almost inverted in a bearish stacking there. And so we come back to Halliburton, and Halliburton, the EMAs are set up bullishly. They're stacked bullishly. All the candlesticks are on or above the 5-day exponential moving average. So that's still pretty hot. When you have a stock that can do this with the market tone we just looked at, that's pretty hot. All right. I need to start moving a little faster here, because I am I'm getting too excited here. Etsy was last week's not hot stock. And just take a quick look at the chart. Nothing really has changed. This was the big day down last Thursday, and I think it was Thursday. It was somewhere in here. Anyway, it came down, moved sideways today, put in another big solid candlestick. So again, Etsy has not changed its colors. It's still a not hot stock, as it's showing that the 10-day here 10-day exponential moving average to be resistance. So now we're going to jump into what is hot and not this week. And then I've got one bonus hot one for you afterwards. And we're going to use our new favorite way of looking at this. Come up here to market. We're going to change this to the weekly. And let's look and see the last week. There's only one that has been, bullish in one industry. And that would be energy. So now we're going to come here and we're going to find energy. We're going to click on energy. Here we go. And all right. Now I got one confession to make. When I was doing my homework on this, I was looking at the daily, not the weekly. Whoops. I didn't know that would change the whole thing. And the chart was also looking a bit different. And so what I picked now doesn't look quite as hot, but we're going to go with it anyway, because you'll see in a second that the chart is still really hot. Anyway, DVN, that was my pick for a hot stock. And we take a look at this, and let's look at the last year. That's pretty hot still. I mean, we're going from the bottom left of our screen to the top right of our screen. Whenever we're doing that, it's an uptrend. We're making higher highs and higher lows. And you look at, especially, goodness gracious, look at the last couple months. Really nice moves up. It did come back down, bounce off the 100-day simple, which is shown to be support. Kind of was riding it here, kind of a little bit below, but put in a bounce right there on the 100-day simple. And zoom in a little bit here. You look at this chart. This doesn't look anything like the S&P. The S&P's kind of been volatile, to say the least, but also a little more bearish lately. And this chart just kind of keeps going up. It's been riding the 5-day exponential moving average for a lot of the last couple of weeks. And yeah, it has pulled back some, but stocks do that. When they are hot and they're running up, they will sometimes pull back a little bit, find another EMA and bounce. And that might be what's happening here on the 20. That could very well be a bounce. We'll just have to wait and see what tomorrow looks like on that. But earlier today, this thing was looking really nice with a massive candlestick moving up there. So DVN still really hot. Look at the 3-year weekly chart with me. We're looking at the bottom of the COVID crash. This guy was down to like $5 a share, just below that. And now we're up around 50. I mean, we're talking 10-fold increase in the last less than 2 years. That's pretty hot. I mean, percentage-wise, that might be the hottest stock that I brought forth yet. So when we look at it from that perspective, very hot stock. You can see earnings here. Beat earnings there, beat earnings there, beat earnings there. Here, oh, they missed earnings. But look at this. This is kind of funny, actually. They missed earnings, and the stock still went up. Stock's like, oh, no, it's all good. We're fine. We're still going to keep going up. It went up, and it rode the 5-day for a while. I've shown you some stocks that had great earnings and still failed. And here's one that misses earnings and still moves up. So that's why DVN is our hot stock for this week. And now let's take a look at what is not hot. And I was about to just give it away, but we're going to come back here to market, and we're going to look at the last week, and the most hit industry would be consumer cyclical in the last week. This is clearly the weakest industry in the last week. So let's take a look at the heat map. And again, I need to change this to weekly. Consumer cyclical. And I am getting lost in my own stuff here. I don't know why I can't find it. So you know what? We're going to skip that part for this time, because I'm not sure what I hit, but it was leg. Maybe it wasn't consumer cyclical. Maybe I had the wrong industry. Whichever case, here we are, LEG. This is our not hot stock for the week. And look at that. I mean, that's a pretty solid downtrend there. You know, I know the market's been a little crazy in the last couple of months, but most of the last year, the market's really been ripping up. All right, let's refresh ourselves right here. Boom, look at all this. That's still bottom left to top right. Again, yeah, the last few days been a little crazy, but this is still mostly hot uptrend, right? And then we look at leg, and it's doing the opposite. Yeah, I kind of peaked there, but since that peak, it's just been going down, right? And it was up around 58, and now we're down to almost 38. So it's lost quite a bit. I was about to crack some kind of a leg joke, but I'm not even going to try right now. So it's going to be fun. But anyway, look at today, right? This is our not hot stock, and look at the massive drop there. Look at the massive drop that happened there. Look when they missed earnings by not even very much, like 5 cents. It wasn't even so bad that it earned itself a solid box, kind of like this good earnings here. Like they missed it just barely, and the stock came crashing down. So that's LEG. That is our not hot stock for the week. All right. Now, for what I promised you guys, we're going to take a look, and let me make sure I don't miss some of these comments here. Adam's saying he had puts today in Home Depot. It was a hot pick for a bearish play. That's great. All right, let's take a look at Home Depot real quick before we get to our final hot stock. I love seeing that when people are able to take profits, and wow, yeah, look at that. Big M forming here. Broke through the 50-day. That 50-day was support here, right, on the M. Broke through the 50-day, moved up as a kiss goodbye. We just talked about the kiss goodbye at the very beginning. And then right when it kissed the 50-day, I mean, it really said goodbye. I mean, it was like, I'm gone. And this thing dropped from, 390-ish down to, 350 today. So, wow, fantastic day to be in a put, which is an option that makes money when the market goes down. A lot of people don't realize that you can actually make money when the market goes down. And sometimes you can make more of it faster. So excellent job, Adam. That was exactly right. A hot bearish play. So this was a not hot stock, but for you it was, because you were correctly invested in a bearish instrument. So that worked out very well. Benjamin, I see what you're saying there. If only had long-term puts on the leg one. Yeah. If you had done like the put version of a leap on this one, that would have been pretty insane. Or you don't even just necessarily need a long-term one. Take a look at this. This guy just likes to come up and bounce off the 50, right? Bounce down off the 50, hits the 50 and down. So what if every single time it bounced down off the 50, you got into a put for a few days? You made some money there. You could have made some money there. Could have made some money there. There, yeah, you probably would have taken a stop out, right? Because it hit the 50. Well, actually didn't even bounce down. There might not even been an entry signal. So, and you may not even been in that trade because there's earnings right there. I bet earnings, the anticipation of earnings, messed up the play or the pattern right here, and so temporarily it went above the 50-day and then came crashing down where it belongs after earnings, and then it came up to the 50-day there again. 50-day and bounce down. So you don't even necessarily need the long-term puts. The short-term would have worked as well. All right, here we go. I'm going to hit you guys with one more ticker to look at, and this is also a hot stock. And once I show it to you, I'll explain it. We are going to look at Ulta Beauty, and let's look at the 6-month. And here we go. Here is a stock that I look at and I'm like, wow, that is hot, right? And you're like, what? David, that thing's not going up. It's just going sideways. Like, it's at the same price as it was back in August, back in the summer. The last year it's kind of gone up some, but then it just went straight sideways. And I'm looking at this, and the way I look at this guy, I'm like, wow, but it's rolling. So much you can do with a rolling stock. And it's repeating its bounces off the same support line or near it and it's repeating its bounces down off the same resistance line. So it's repeatable in a bit of a reliable way. And so maybe I could now, with a certain reasonable amount of predictability, well, exactly there, predict it. What if I could predict what the stock is doing? Not that I know the future, but based off of historical data, because of its repeatability and reliability, maybe now I could predict what it's going to do. And so if you look at this chart right here, and it was, here you put in a little bounce, moved up, and then it came down, hits that line, moves up, comes down, up and down. I mean, what do you think it might start doing here? Potentially start moving up, right? I'm not saying that it's going to do that tomorrow. I have no idea what's going to happen tomorrow. We also have a little different market tone going on, which could honestly break this pattern. This pattern could very well be broken tomorrow. But without the craziness of the market tone going on, we look at this chart right here, and we've got a very clear support line and a very clear resistance line, and the stock is just rolling in between there. What if we had recognized this after, there's a touch there and there, there and there. And what if we had recognized this in this area right in here? Like, hey, here, we'll even go one more. Say right in here, you decided, I think I want to, buy some shares in Ulta because it's rolling between these two lines, and you bought, and then a few days later you sold up there. You could have made a 10% return on investment in like a week on a stock trade. Pretty crazy. And then a few weeks later, it comes right back down. You do the same thing, and a couple weeks after that, you're selling again for another 10%. And who knows how many times that thing could continue on. That's pretty hot for me. Anytime that you have a pattern that is repeatable, reliable, and predictable, that is hot for me. And especially when it's a rolling stock, there are so many different strategies you can do here. We just talked about buying the stock and selling the stock. But what else could you do? Well, you could buy calls. You could double dip this thing and buy puts on the way down, just like Adam did with Home Depot, where he bought a put on the way down. If you bought the put right there, you sold it 2 days later there, you made some pretty good money. You could do credit spreads. You could do debit spreads. You could do cover calls. You could do shielded cover calls. You could do some of these exotic trades like ratio spreads, straddles, strangles, iron condors, butterflies, the purple dragon lizard. Just kidding on that last one. That's not a real strategy, but it sounded cool. But all those other strategies, those are real strategies that could be looked at for this simple rolling trade, this rolling pattern right here. You could look at all those different strategies. And so there's strategies out there that'll tailor towards your risk tolerance and your lifestyle. And you could use those to help, make money, period. I mean, that's there's no guarantees of anything, but that's what we're looking to do. We're looking to make money and preserve money. And these strategies are ways that we can do that. And so I just found it very interesting that just take a rolling pattern, just a stock that's moving sideways. There's all these different ways that we have the potential to make money in the market. So that is our also what is hot stock, simply because of its predictability, reliability, and how it repeats itself. So there you have it. Now maybe you're thinking, hey, this is really interesting stuff. I want to learn some more. I want to build some skill sets so I can be able to trade in the market as well. And you know what? We have a great opportunity coming up for you. We are offering a Step 1 online course. I believe this will be the first one of the year that we are offering, and it'll be February 11th and 12th. That's a Friday and Saturday, 2-day, all-day online event where you are going to learn the basics of trading in the stock market. And it's a great way to just start your journey and start learning some of these strategies. The first step is primarily stock trading strategy that we talk about because we want to make sure we get the basics before we go dive into options or any of these crazy other plays, strategies that I told you about. minus the purple dragon lizard. That one was just made up. So anyways, if that excites you at all, go to www.tradeway.com. Once you go there, there'll be a big red button right in the middle. Just hit that and that'll say start your journey. Step 1, start your journey. And that'll bring you to a page where you can sign up and learn all about it. So thanks for being on today for Stock Talk Thursday. We'll see you guys again next week. Benjamin, Adam, thank you guys for the interaction. Love that. Love being part of this with you here. And seriously, if you have any, interest at all, go sign up for that course. www.tradeway.com. Big red button in the middle. Start your journey. All right. Thanks, guys.